Hello, everyone, and welcome to this interactive closed-door discussion on scaling inclusive payments through interoperable QR codes, convened by the UN's Better Than Cash Alliance and the Center for Digital Public Infrastructure. The UN's BTCA is a partnership that accelerates the transition from cash to responsible digital payments. The Center for DPI is an academic center housed at the International Institute for Information Technology that provides pro bono tech guidance to countries building DPI. My name is Tanishka Ved. I'm from the Center for DPI, and I will be your host during this workshop. In the room with us today, we are privileged to have central bank officials and switch operators from over 30 countries, along with representatives from the Bank for International Settlements, the IMF, the World Bank, the Cambridge Center for Alternative Finance, and other esteemed institutions. To facilitate open dialogue, this workshop will adhere to Chatham House rules, and we request participants to help maintain the privacy of the speakers. Only country presentations will be recorded, after which we will move to closed-door discussions for deliberations regarding country-wide adoption, rollout, and scaling of this DPI. Please feel free to post your questions in the chat room anytime during the session. We will aim to address at least one question after each presentation, and we will open up the larger floor for discussion once all speakers have had a chance to address the room. We truly hope to make this an action-biased seminar that the leaders in this room can take back to drive financial inclusion in their own countries. We thank you once again for your participation, candidness, and willingness to push for meaningful change at scale together. Our first speakers for today are Dr. Pramod Verma, the former Chief Architect of the India Stack, co-founder of the Foundation for Interoperability in Digital Economy, and co-chair at the Center for DPI, along with Ms. Kamya Chandra, the Chief Strategy Officer at CDPI and advisor to the Indian Ministry of Finance on DPI.
Thank you so much, Tanishka, for that warm introduction. Really glad to be here with you all today on this extremely topical issue of how we scale inclusive payments via the use of interoperable QR code specifications. So just quickly for the day, I'd like to run through what we want to achieve. Obviously, many of you are already familiar as central bankers and switch operators and thought leaders in this space as to why interoperability matters for payments and what an interoperable QR standard can actually do. But we'll recap that quickly and then quickly focus on sharing country experiences and learnings from Brazil, from Nigeria, from the Philippines, as well as India. And identify, hopefully by the end of this hour and 15 minutes, identify the right design choices and strategies that can actually improve odds of success and have a chance to ask candidly, questions from fellow central bankers and switch operators in this space. So just diving right in, right? We know the status quo, that digital inclusion is growing, mobile wallets penetration is growing, but every new payment method does end up building a silo or a moat. They build their own network, right? And in some cases for QR, they build their own proprietary QR standard. So what this results in is a lack of interoperability for the end customer, where each, not only is it inefficient, where each entity ends up having to build its own network, but at the same time, for the user, you have confusion as to which app can I use to access, which kind of payments network. So what we really want to try to get to is a version where, if we can see the next slide, where we can get to an interoperable QR code specification. Now, what does this do? It's a very simple update on existing systems that exist all over an individual country, and it unifies payments for customers. So if you look at this little icon here, you see a street vendor. That street vendor has been acquired by one, let's say, of the many mobile wallets or fintechs or acquirers to provide one QR code. And based on that, a variety, of customers and people that would like to transact with him can actually use any app of their choice in order to interact. That's the power of publishing an interoperable QR code standard. And in terms of what this does for society, it means that this small merchant can get onboarded by anyone to participate in a network that includes everyone. Whereas before you would see fragmentation, you would see silos, you would see this same small merchant with 4 different QR codes in the front at best, right? Or none at worst, right? Because you don't see those network effects in scale. So actually, if you get down to the full sort of set of societal benefits that we see associated with interoperable QR code payments, we not only see sort of customer choice and increase of the number of apps they can use, and therefore competition and innovation on the user experience for a customer to make a payment. Maybe you have multilingual apps that come up. Maybe you have those for visually impaired folks. And that innovation exists because the network is common, right? And that's the power of publishing a QR standard. But you also see, again, as I mentioned, the onboarding of merchants becomes once only, and therefore you get network effects in payments, right? And you see that scale up of digital payment transactions. And you see new business models coming up where there might be fintech or mobile wallet companies that only operate on the acquiring side and maybe don't even have a customer facing app. Maybe that's their business model of serving, offering payments without even completing a consumer app side transaction. More importantly, because this is sort of a very simple paper-based technology implementation, right? All it takes is for a small merchant to actually publish a piece of paper that can be a static QR at its lowest and least sophisticated level. It brings on a diversity of merchants into the ecosystem, and it's much less complicated than, let's say, NFC or others which have more sophisticated connectivity requirements. Finally, the last case I'll make is that interoperable QR as a standard is actually critical on the path to seamless cross-border payments, because when you have a standard, at least at a national level, you can interact with another national standard, and it's much simpler to design for cross-border interoperability that reaches the smallest merchant. And we saw this, for example, between India and Singapore that recently went live on cross-border payments via their QRs, as well as you saw this between Thailand and Singapore and many other contexts, right? So I think looking forward, what are we asking? We're just trying to get to a framing of, oh, sorry, can you still see my slide? Yeah. So I think what we're saying as a next phase is that it's not just actually about solving for payments. This work actually has powerful second order effects towards economic growth. So the moment that you actually formalize a merchant and formalize a consumer to pivot them to a payments method that is accessible for them and as easy as cash, you see a lot of second order effects in the economy, such as an increase in deposits within banks because they're more comfortable of taking that money out based on their intent. You see a growth in commerce based on the frictionlessness of a digital payment. You see abundant granular bank statement data starting to show up that is actually useful for lending. And so some of the second order effects are small ticket loans, let's say, being approved and authorized for these merchants who otherwise had no collateral, had no other way of proving their credit worthiness to a bank. And finally, you see a trigger-on effect of increased investment, increased economic activity overall. So this is quite a big initiative that can be kicked off with just a small change, which is the ability of a central bank to actually publish that interoperable QR standard. So at this point, I'd like to hand it over to Pramod to actually walk us through what it would look like to build the right kind of QR standard. So Pramod, you want to help us out here?
Thank you, Kami. Has been, this is coming along really well, and very, very glad to see a healthy global audience interested in the topic. And because I think this has, as you were saying, significant ripple effects or domino effects when you create interoperability. And so I think, which we don't see. A lot of times we are, micro stuck in our own issues of siloing and business alignment and so on. But as countries, somehow I think we have 4 of them today, if I am right, and who is explaining their successes. So Look forward to hearing that. And again, thanks to President Cash Alliance, World Bank, BIS, Cambridge, IMF. They're all here, and thank you for all the support that you're actually doing. So I just want to take a little bit of time to, if you were to imagine interoperability, how would you imagine payment interoperability? And it's not the whole thing, just QR. How do you even design a simple QR that is reasonably future-proof and gives you largest network effect if it gets adopted? Of course, adoption is always a challenge to get it through, but once adoption kicks in, you want a much wider network effect. So maybe we can move to the next slide, if you can. There are a few things that we want to be able to carefully design, and this is essential in thinking interoperability, because if you think we are going to do payments only for banks, then you would design in a particular way. If you think, oh, this is only for mobile money operators, then you would design in slightly different way, slightly. And then for card networks, okay, of course, slightly different way. But money is money is money, is an account is an account is an account. And that's what we have seen. Very, very interestingly, consumers don't really care, how the form factor. That's the first one. They don't care about the form. You have to design a QR code that is form factor agnostic. That means you don't know what the future devices or voice-based payments or what all going to come. And it's very tricky to reimagine, or it'll be always a point of sale or a desktop or a kiosk, ATM, or a smartphone, feature phone, things that we know of, and things you don't know what's coming. So form factor agnostic design is very key. So when you design a new modern architecture, you want to be able to think about how to abstract form factor so that you don't get stuck with one form factor design. Same goes for mode of payment. A lot of times I see designing, assuming connectivity, or some people design separate one for offline, separate one for online, separate one for dynamic QR codes, different, slightly different, static QR code, slightly different. But if payment instruction is a payment instruction, I think again, you want to be able to think, broad enough to be able to actually design so that one spec can start capturing a lot more than what you originally anticipated to capture, and hence abstraction is needed. Application used to play, and we read this is very, very key. We want to be able to open up the idea of digital public infrastructure, what CDPI stands for, and what many of you are building, is that innovation is open to market. Innovation is open to banks. Innovation open to mobile. You never know what would come in the future. You can't make any assumptions that this kind of application, this kind of workflow, this kind of UI or UX will be used. Any such assumption falling into QR code would break the idea that you can actually innovate, because innovation is embedded in QR code. Innovation should be a layer above QR code. And the last one, my favorite one of them, is the abstraction of accounts. And this is precisely, and we have, I think, UPI folks as well today. Probably Anubhav is here today as well. He'll talk about that. Where originally India's design was not even thinking cards. We designed a payment between the banks. Then the wallets joined. Then mobile money. Then now cards are linked to QR. It's not about a merchant receiving money. Think about it. It's a payer using a card to pay on the same QR. This is very interesting, right? Account, store of value, becoming a card or store of value, or a lending account, or any types of account. And you want to be able to abstract, and without having to tie in attributes that are only specific to banks, or only specific to mobile money, or only specific to cards, because you can't keep thinking about it. So you need to be able to abstract it. And you can. The good thing is that you can. The next slide, please. Here is an example, and CDPI looked at much of the things that all of you had done, many of you are implementing, and came up with some, an interesting way to depict a payment QR. I mean, it's not, you can do, take it, you can modify, you can do whatever you want to do. It's not CDPR is not a standards body, but we definitely want to think about design. We want to trigger your design imagination and to while it's interoperable, it's future proof because we don't know what the future is. So this is an example of where currency representation, and very interestingly, if you look at pay pair addressing, we have suggested a normative payment addressing mechanism that allows any receptacle, payment receptacle, including CBDC, you should be able to actually pay from. Very interesting, right? If I have a CBDC wallet, but the vegetable vendor, she doesn't have a CBDC wallet. She wants a regular currency wallet, maybe a bank account. Can a CBDC wallet interoperate with on the same QR? And answer is pretty straightforward, actually. You can. And if only you represented the addressing and so on in a normative fashion. So we encourage you to think not only interoperability, think future, think variety that you can actually unlock and unleash. That's a very interesting possibility, right? Next one, please. And of course, while doing it, and it's very key that when you design it, you want programmability. And that's something which I let you imagine, because if the QR structure itself is very, very lightweight, generalized, then a programmability layer comes. And examples are vouchers. You can actually now create food coupons or e-vouchers quite easily as an extended programmable representation of the same QR. Simple QR, but recurring or repeating or purpose bound. Very, very interesting possibility rather than putting all that heaviness into QR code. So one danger of designing QR code is that we are trying to imagine all possible use case and put all those use cases into the QR. Then the QR gets very heavy and become very precise. Instead, try to layer it and allow programmability, and you can create layers on top of it. And of course, QR code specific technology is a small portion of what all you all do. And much of the hard work is adoption, regulation, incentive alignment, consumer support, trust in the whole system, and many things. So I think the hard work doesn't go away, but we see very good playbooks being created among 3, 4, 5 countries like Brazil and so on. We are all encouraging all the countries who are present here to publish their guidelines and playbooks, ideally as an open source resource, a digital public good for other countries to be able to take it and adapt it to their need. Because why should every country think through the same pain points that all of you have gone through? So we encourage you to publish this at DPG as well. And of course, when it comes to adoption, nothing like adoption. And almost always you will see very, very hard, slow curve in the beginning and a hockey stick after that. So you would see the curve. All 4 countries you're going to follow after me who's going to say the same story. So wonderful success stories, but hard work in the beginning and very, very painful hard work. And that is getting consultations going, getting asynchronous adoption. If you get everybody to agree with you, it's almost a non-starter. So you have to, regulators have to take some bold decisions in going with the challengers. So you have to find the right challengers to adopt early, because very hard to get incumbents to sometimes play the game. So it's almost always the case that challengers want to disrupt, incumbents want to stay put. So regulators may want to look at that as an opportunity. And of course, create what you call market enthusiasm. Enthusiasm comes from reimagining how the country could do hackathons and sandboxes, regulatory sandboxes, and so on. It's something you can think about. And most importantly, don't go after disruption game. Disruption will be the most opposed. Rather than look for new use cases, there are always plenty of new use cases and unknown, uncharted areas where not yet payment is not yet, or the incumbency or the penetration is not that deep. And you can look for those use cases, and that's very key for you to look for, so that you are not going after most used system and saying, let me disrupt it, because that's very hard. People would oppose it. Citizens will say, I already have a behavior, and why should I use it? And so on. So it's very important that you look for something that is upcoming, look for riding a new wave, and then you unify lot more older structures into the newer QR. I'll stop there, and again, thank you so much for being here. And I am, for one, definitely looking forward to the 4 follow-up countries. I would love to hear their stories and what they have learned, the hard work they have learned beyond just publishing the QR spec. So thank you so much, and look forward to this topic discussions today.
Thank you so much, Kamya. Thank you so much, Pramod. May I please call upon our next speaker, Ms. Prerna Saxena, the head of the Asia Pacific Better Than Cash Alliance. Ma'am, please.
Thank you, Tanushka. Hello, everyone, ladies and gentlemen. On behalf of the Better Than Cash Alliance, I very warmly welcome you all to this webinar. We're very pleased to be having this partnership with Center for Digital Public Infrastructure. And it's so great to have colleagues from World Bank, BIS, IMF, ATP, and several other esteemed organizations joining us. We're very, very grateful for all your time today. As Tanushka had already briefly mentioned a little bit about us, I wanted to share a bit more about what Better Than Cash Alliance is. And perhaps many of you may be aware that we are UN-based partnership of more than 80 members, which comprise of governments, international organizations, as well as private sector companies. And together we make progress towards transitioning from cash to digital payments. We are very pleased that a lot of our members from across Asia, Africa, and Latin America are present here in this webinar. And we are keenly looking forward to listening more about their journeys. And we can guarantee you that the insights would be very, very useful for all of us present here. However, before we start, I know this is the converted lot here, but as Kamya talked about a lot about how digital payments trigger a lot of economic growth, I wanted to take a moment to share with you how digital payments also trigger the journey of digital financial inclusion for a lot of underserved segments. There's ample evidence available now that receiving a digital payment directly into an account also triggers the user to make a payment by themselves. And Findex 2021 showed us that 83% of the adults in developing economies who are receiving a digital payment are also making one. And almost 2/3 of the digital payment recipients also used other financial services like cash management, and they could also use their payments trail to borrow formally, which is a great achievement for all of us present here. However, there is a lot more to be done, and that's why I wanted to refer to the UN Principles of Responsible Digital Payments, which were launched by India's Finance Minister, Honorable Mrs. Nirmala Sitharaman. So you would see that these 9 principles remind all of us who are working in this field to be working in a way that we are inclusive, we are growth oriented, and we are responsible in our policy making as well as innovations, implementation of our solutions. And today I'm pleased to say that a lot of talk that we will have will focus on many of these principles, whether it is about ensuring that the funds are protected and accessible, whether it is about taking a user-centric design and prioritizing women. At the same time, it's great that this entire discussion is going to be very centrally focused on principle number 7, which is about providing user choice through interoperability. And why this is important, because we see that several countries or practitioners, when they make their transition to digital payments, the interoperability comes to their mind much later. And by that time, the users have already started using a particular platform and they face a lot of friction in making payments to other platforms. So it is important that we keep this in our mind right from the beginning or as early as possible, and therefore invest in shared infrastructure to reduce costs. And there are, of course, a lot of recommendations on how governments, IDOs, and companies can make this journey towards interoperability. So I won't speak a lot more, but I just wanted to say that this partnership that we have today is very impactful. We have speakers from central banks. We have a lot of influential people here who can make impact through effective policy making and innovation. So when we do that, we should remember that all the work that we are going to do should be focused on ensuring inclusion, should be focused on managing exclusion risk, and also developing sound governance systems, as well as ensuring that there is transparency in pricing, there is enough grievance redressal mechanism available to the users, particularly the low income segment on which all of us are very heavily focused. And with this, I would just like to stop here. Thanks, CGPI, for giving us this opportunity to partner. Over to you, Tanushka. Thank you all.
Thank you so much, Prerna. Moving forward, I think now we can dive into country presentations. We have Nigeria, Philippines, Brazil, and India presenting today. To start us off, may I please request Mr. Premier Owo, CEO and MD of the Nigeria Interbank Settlement System PLC, to take the floor. Sir.
Good afternoon, everyone, and it's very nice to be here to speak to all of you. And I'm happy to speak from Abuja in Nigeria to all of you on the QR code and our journey so far. So we are NIBS, and at NIBS we are owned by all the banks and the central bank in Nigeria, and we provide platform-based the services, which include payment, switching, identity, and data warehouse to all the banks. So our journey, we started our journey on the QR in March 2021, and our QR standard has been built based on the EMVCO standard. And so far, we have about 65 connecting entities. And as you are aware, the NQR could either be static and reusable or dynamic, which can be scanned only once. So customers of NQR integrated institutions can scan to pay. Most of the banks in Nigeria and other entities have the capability to scan on their mobile app, and then as merchants present their scan. So some of the critical features we have on this NQR is the ability to use it seamlessly in an easy way. But most merchants in Nigeria also love instant credit. So our NQR has been built based on instant credit. We are competing against cash, and if we're competing against cash, we have to provide a platform that will replace cash, which will be instant and non-disputable. So we have that was built around that, and there also have is fast, secure, interoperable, and then seamless integration to various merchants. So the journey so far, like I said, the NQR was launched in March of 2021, and in the heat of COVID, we were doing a lot to ensure that this, because as you know, it's a contactless payment mechanism, and which, because people were scared of cash, our instant payment platform received a very huge boost at that period. But we decided that where the QR might be the best way to go, and worked on that. Then partner integration with local banks and other financial institutions to provide this scanning. All that has been achieved across the entire platform and within the country. Then we are currently optimizing the NQR unification platform, that's admin console, as well as the APIs to drive local and international QR code interoperability across the ecosystem. So far, the milestones we've achieved, seamless NQR. QR, we call it NQR, which stands for the NIBS QR. So if I'm using the word QR or NQR, I'm actually referring to the same QR. And the code management and instant account based. The QR is account based, and like I said, it's instant. Then strategic partnership. This has also been achieved across the Nigerian ecosystem. We have about 230 million people in Nigeria, but there's still a lot to be done in terms of digitization. QR with both local and international QR. The certification process has been created for that harmonization to take place. So, for instance, we have a local scheme Verve and Visa, MasterCard, as well as the UPI to present a single QR code for scanning. On January 16th this year, we launched our national domestic card, which is called the Afrigo card scheme as a domestic card scheme. And one of the big features of the Afrigo card scheme is each card is going to carry the customer's QR to address a lot of other features within our Nigerian ecosystem. So the NQR interoperability process flow is depicted here, which is quite simple. Analysis and requirement definitions are provided, then the QR unification, then operationalization, merchant onboarding, billing, support services, as well as updates, then system integration with partner schemes based on API sharing for bilateral connection via secure networks, the integration to existing channels for inclusive payment, then certification. The QR process requires level of certification for onboarding. Then what are the challenges we faced and solutions? Of course, adoption rates. I mean, one of the speakers spoke to the issue of slow pace of adoption. Yes. Trust issues. Most people just seeing a kind of little square box and you're asking them to scan it and then send money. I mean, provide lots of trust issue. But what we notice is that most people that once they tried it the first time, they love it. And most of the religious bodies, like the churches, are using it for their collection right now. And then the tax authorities have also adopted it across state and federal level. So most of the bills now have the QR code you could just scan and then make the payment. So there's actually still a low adoption rate, but we are pushing and it's driving. Then transaction settlement, which is a complex transaction settlement requirement for cross-border and international payment, is because of each country's specific requirements around that. Then the technical challenges integrating with client system using different technical standards. Okay, so I think that we believe that a uniform standard will address this across each international borders and so on. Then enhanced payment benefits so far. Benefits of this interoperability is simple. It will enhance and make payments a lot faster across the ecosystem, improve user experience. That cannot be, I mean, if you, one thing we've realized that most people can forget their keys, forget their debit card, but they don't forget their phones. And once you have your phone, you could scan and then make payments at anywhere. So that helped very well. Then the low operating cost for the industry is we have a centralized platform for the QR is quite low. Deployment is low. As long as you print out, you don't require power or any other thing to get this thing done, especially in the rural areas. So that helps to drive adoption. Then global adoption and acceptance of QR payment. QR-based transactions will become a very reliable payment option worldwide. And there's a lot of integration going on, especially even with the insurance scheme in Nigeria right now, to ensure that you could just make payment, get your receipt, and a lot of other things. So we are still evolving, and then a lot of things still at play in Nigeria. But that's our journey so far, and I want to thank you all for listening.
Thank you so much, sir, for sharing your thoughts. May I please call upon our next speaker, Ms. Bridget Rose Messina Romero, Director of the Banco Central in Pilipinas, to take the stage.
Hi, good day to everyone. So again, I'm Bridget Messina Romero from the Banco Central ng Pilipinas. I'm with the Payments Policy and Development Department, so we're primarily in charge of developing policies and also pursuing collaborative initiatives with the industry as well as other regulators so that we can further enhance existing payment systems in the country. So I would like to thank the Better Than Cash Alliance for the invitation to the Philippines to share experience in developing the national QR code standard as a way for us to move forward in our payments digitalization journey. So just to briefly give an outline of what we'll be presenting, we'll be sharing our digitalization journey insofar as the take-up of digital payments or digital retail payments in the country has been, and what motivated us to develop a national QR code standard, which we call the QRPH. So that's the logo that you saw earlier in the first slide. And then we'll be sharing the 2 use cases for which the QRPH is currently being used. And finally, some insights on the growth that we've seen so far and the challenges that we continue to address together with the stakeholders. Okay, so on our digitalization journey, it actually started in 2013. So with a country diagnostic done by Better Than Cash Alliance. And we were really surprised with the results of the study because at that time, we already had e-money issuers in place and also enabling regulations that would support the legitimate use of e-money in the country. So that's in addition to existing digital banking services being offered. And in that study, it was shown that only 1% of the total retail payments in the country was made in digital form. So that prompted us to delve deeper into what were the root causes, and some of which was really the existing silos in the ecosystem of the retail payment landscape. So we pursued the development of our national retail payment system framework. And this was done again with the insights from the study that done by the BTCA. And back in 2019, so we did the NRPS framework somewhere between 2013 and 2018. So that was around 2015. And then we issued the policies in 2017. We launched our batch and fast payment system, PESONet and InstaPay respectively, in 2017 and 2018, respectively. So by 2019, the Better Than Cash Alliance again kindly extended assistance to us to help us monitor the progress of our digitalization journey through this formulation of a measurement model that has now allowed us to track the annual progress of the payments digitalization in the country. So you can see here that from 2019, it's at 10% already. And based on the latest data that we have for the year 2022, the total retail payments in the country, 42.1% of the total retail payments in the country are already in digital form. And we want to highlight that consistently throughout this 5-year period from 2018 rather to 2022, there are at least 2 use cases that have driven the growth of digital payments. One would be merchant payments, and the other would be person-to-person payments. And this is very curious for us because now we're seeing how this growth, the 42.1% growth or share of digital payments in 2022, could be attributed as well to some recent data that we discovered in our financial inclusion landscape. So what we're seeing is that as we're moving forward with our financial inclusion agenda, we're also moving forward with our payments digitalization agenda. So we saw that there was also growth in the use and opening of e-money accounts from now. I think the number of e-money account users already surpassed those with bank accounts. It used to be 8% in 2019, and now it has grown to 36% in 2021. And we're also seeing that these accounts are now being used more for payment transactions rather than for savings. And the high mobile phone penetration in the country also helped us. So these are the landscape that we are currently operating in as we continue to drive digital payments adoption. And these are relevant because later on, I will share that the QRPH that we have developed and deployed are being used for specifically these 2 use cases. So the tremendous growth in the next slide, please. The tremendous growth in payments digitalization can be attributed to this approach that the BSP has consistently adopted, wherein we always engage with the industry. So we have to ensure that the development of a national payment system comes through effective collaboration. And this has been instrumental always in driving digital payments adoption because it allows us to identify right away if there are any enabling policies that are needed from our end, as well as spearheading some of the initiatives. And with this, we identified that the fragmented QR code system then in place had to be addressed. So we issued a circular that introduced the national QR code standard development by the Payment System Management Body, or which is the Philippine Payments Management Inc. in the country. So this was issued in 2019. And then soon after that, the QRPH for P2P payments was launched in November 2019. However, the pandemic happened, so there was a bit of a delay there in the launch of the QRPH for merchant payments. Eventually, it pushed through in April 2021, and then a full launch followed in October 2021. In pursuant to the circular, the industry developed a national QR code standard, and the standard that they did use is the EMVCO standard, so that it's easier to eventually use this for even cross-border payments. And the benefits was self-evident to the industry already, for QR code at least, because it's more convenient, it's easier onboarding of new users, since digital financial literacy is also one of the things that we continue to address. There's also enhanced data privacy, so you don't have to reveal your account details to others, and then it eliminates errors due to manual encoding of the transaction details. So, so we just wanted to share that, for example, we have this program, we call it the Palenque or PH Plus program. Palenque is what we call the wet market in the Philippines. So Palenque QR is like a play on the word of Palenque. So this program was launched together with another government agency, Department of Interior and local government, so that we can widen financial inclusion and build a digital payments ecosystem in the country by promoting cashless payment instruments in public markets and local transportation throughout the country. So this is another way where we can show public and private sector collaboration can be really instrumental. Next slide, please. So here we just wanted to show that there are common features of QRPH for P2P payments and merchant payments, or what we call P2M. For the common features, of course, is the interoperability feature. Both QRPH, P2P, and P2M are designed to allow their clients to be able to transfer funds, even if the sender and the receiver maintain accounts in a different bank or non-bank e-money issuer. And the latter one is possible because the QRPH currently runs on the InstaPay rail, which is I mentioned earlier, so fast payment rail. This fast payment rail already operates under the principles of the NRPS framework, which requires that electronic fund transfer services should be interoperable. So we eliminated the silo approach that previously existed. And then accessibility is done through the mobile apps of participating financial institutions. For the differences in the features, for person-to-person payments, the sender currently pays for the fee of the transaction. And there is a 50,000 peso limit, which is roughly around 1,000 US dollar. For merchant payments, there is no cap in the transaction limit, so it can be used for purchase of goods and services. And the fees are also borne by the merchant. So it follows in a way with a merchant discount rate model used for card-based instruments. However, the industry did adopt a lower rate for the merchant fees, and we're currently closely collaborating with the industry to make the fees more affordable for the micro merchants that we want to be onboarded or to use more of this QRPH code. So finally, we just want to share a little bit about the growth story. You can see here in the graph, it's very apparent that the trajectory of the merchant payment usage of QRPH has now been greater than the P2P payments. And you can see that starting, I believe, late the second half of last year, merchant payment volume for QRPH already overtook that of P2P. So in fact, as of July 2023, for example, if we have around over 6 million transactions for QRPH merchant payments, for P2P, we only have over 1 million. So even if we launch P2P payments earlier than merchant payments, obviously the use case or the commercial use case for QRPH for merchant payments is really greater. And however, despite this tremendous growth, there are still challenges that we must address. So we share that, for example, there is still some confusion. As mentioned earlier, there are differences in the features of P2P and merchant payments for QRPH. So we continuously have to be aggressive in terms of promotional and marketing campaigns. And we also have already mandated through the issuance of another policy earlier this year that we prohibit the use of proprietary QR codes anymore. So all QR codes that you can see for payment services should follow the QRPH logo. And then we require them to educate their merchants and their customers about the features of the QRPH. And we're also working with the industry for possible adjustments to the branding and to the messaging of the QRPH logo and design. Another is we're working to make QRPH more affordable so that even informal and micro merchants will be encouraged to use this kind of service. And finally, this is something that we also want to raise because maybe some of you would have similar experiences. For us, internet connectivity remains a concern. We're working with government agencies so that we can widen and improve internet access throughout the country. But for QRPH to be used right now, we need the sender and the receiver to both have access to the internet. So those are the challenges that we continue to work with the industry right now. And that concludes my brief presentation on QRPH. We hope that these insights will be valuable to your own paths towards digitalization. And just sharing here the QR code, which will lead you to the BTCA case study on the Philippines 10-year digitalization journey. So thank you, everyone. I'll stop here.
Thank you so much for your presentation. May I please, Navila, do you have, I can see you've raised your hand. Okay, I'll continue. May I please call upon Senor Felipe Correa Lima da Silva from Banco Central do Brasil to please share your thoughts.
Thanks for the introduction, Tanushka. I'm Philip from representing here the Brazilian Central Bank. I'm going to share with you how we leverage QRs for our instant payment system, which we call PIX. It's an instant payment system which is a huge success in Brazil. It's actually the most used payment method in Brazil right now, and that happened fast. So I'm going to show how we took advantage of QRs in these systems, and not really just for PIX, but encompassing other payment methods. So let's dive right into it. Back in 2019, we were designing PIX, and we wanted a way for merchants to present transactions for customers, and QR seemed to be like a good idea for us. But we wanted to solve this specific problem where you have different standards and merchants have to use all sorts of different QRs, and it gets increasingly confusing as time passes by. So we wanted to solve this problem, and back in 2019 we were in a regulatory position where central bank could just say, hey, everybody, you are going just to use this standard. I'm going to specify if you want to make payments through QR, that's the standard you're going to use. So it's actually right now we have a countrywide standard since 2019. We use one QR, and inside this QR you can have several payment rails, not just Pix. You could have Visa, MasterCard, you could have all sorts of digital wallets and also Pix. It's central banking forced, so they have to do this way. And I'm going to show you how we can evolve this standard to add new products to the QR. So getting a bit more technical here, Pix has two kinds of QRs. You have the static one and the dynamic. So Pix has this feature where you can route your account using an alias. So all you have to do so that you can receive payments is give away your alias. So you could use your citizen ID. Sorry, that there is someone speaking over.
You will have a fully stocked Greek pantry to make a feast fit for the gods. For the gods won't be so.
Okay, so you could, if you want to receive payments with Pix, you can give away your citizen ID, your email, your cell phone number, or a random generated key. The payer can type this alias in, or you could just scan a QR where the alias will be placed somewhere inside the EMV standard. So that's the static QR, and it's widely used around for small merchants like a popcorn seller, for example. But you have the more complex case where you have the dynamic QR, which in Brazil we decided to just use an URL. So instead of using the alias here in the EMV standard in this specific place, we just use an URL, which points to a server, which then is going to serve a JSON payload. So really, what we did in Brazil was specifying a standard which is called the BR code spec, which is really just EMV, but with some house rules, so that payments can play nicely inside the QR. So that no payment rail can overload other payment rails, which could be inside the same QR. So it's just really just EMV, plain EMV. So the trick here, there are two tricks here. First, we have to ensure this JSON payload is interpreted correctly. So that's why we also enforce an API, a country-wise API, which is on GitHub. You can access it right now. It's in OpenAPI 3.0 standard. So every merchant which wants to show a Pix QR has to obey this standard API enforced by the Brazilian Central Bank. That's how we ensure interoperability. We didn't want to fill the EMV standard with too much information because we feared that the QR would become too heavy. And this way also we can ensure that new products can be added to Pix with minimal hassle, just evolving the API. So that was the idea. So another trick here, as we are using URLs in the more complex case involving dynamic QR, we have to make sure security is observed. So we have some security steps placed in. First, payment readers, they only can read URLs from a whitelist. So if you want to show a QR, which has an URL, you have to talk to the Brazilian Central Bank, and then a list will be constructed, and the readers can only read URLs from that list. So that way, some types of fraud are overcome. Also, they have to send the Brazilian Central Bank to the Brazilian Central Bank their certificates. So we use a technique called certificate pinning. So it's another layer, it's another security layer. We also require that merchants, they sign their JSON payloads with a specific certificate. And for users which are going to use APIs to create and delete and modify what is being displayed in the QR, we require MTLS as an added security step. So also in the adoption journey, merchants have to go through conformance assessment. They have to perform tests against our QA environment. The readers and the presenters have to pass through this test step. And lastly, we have a team at PIX which can respond to incidents and ensure participants are really implementing the APIs and following the correct standards. So when you have readers and presenters, you can have the issue where the presenter is presenting a QR code which is not correct, but he thinks it is, and the reader thinks he's implementing the standard correctly. So we have to solve those conflicts and point where the error is. So just show you some results. So this is the number of payments being done through PIX along the years. Back in 2021, in the fourth quarter of 2021, we became the most used payment system in the country. This is actually in billions. So last quarter, we could process 7.5 billion PIX payments. And if we look at the QR numbers, here they are. So we started back in October 21, we had like 7% of PIX payments were done through QR, but this number is getting higher and higher. And now we are seeing in August 23, 33%, like 1/3 of payments being done through PIX are being done with QR. So the number we are expecting this month could exceed 800 million payments being done through QR, and they are static and dynamic QRs. But dynamic actually are 2/3 of this number. So it's a staggering amount of QRs. We are really happy with our results so far. And we are using this scheme to roll out some new products coming next year using the URL approach, where you download a JSON payload as a reader. We find it very flexible, and it has been working well for us. So I want to thank you for the opportunity here, and I am available for questions later. Thank you.
Thank you so much, sir. May I please call upon Mr. Anubhav Sharma from the National Payments Corporation of India to share his presentation. Sir, the floor is yours.
Thank you. Tanushka, just let me get a confirmation if this presentation is visible.
Yes, sir, it is.
Okay.
Thank you
Thank
so
you.
much.
And yeah, thank you to CDPI and the BTCA. I'm Anubhav and I lead the business development for international payments within NPCI. And it's a privilege for me to be present here with such an august gathering. And given the subject that we have, we are covering few specific pointers on the interoperable QRs in India. And to begin with, when you look at it, and I would go back to what Pramod mentioned, from a standard perspective, what we have defined are URL specifications for the QR. Now, maybe a QR that you see on the phone to the left, underlying that QR essentially is a URL which would, for a normal QR, begin with UPI colon slash slash pay, the parameter name and the parameter value. Now, what this URL string does from the initiation perspective is it gives complete flexibility in terms of how the values will get embedded for multiple use cases. So for an example, today in the most recent version of the QR, we have 50 plus inclusive parameters which are defined to drive multiple use cases, which could be as simple as a merchant category code, a transaction ID, a reference number, including a URL in which my Vodafone bill payment could be listed as an itemized bill. I can check that link and then make a payment. So the way it works is that all of these app providers are mandated to be able to read and listen to these specific links. So while today this link is being rendered and is being viewed as a QR, the same link is agnostic to a protocol, and this link could be invoked on a NFC or a Bluetooth or a ultra high frequency, a sound or a tone, as long as the merchant has this link embedded and there is an enablement on the app to listen to that protocol, that link can be converted back into a payment link and the payment app can be invoked. So this provides complete flexibility, complete open architecture for the acquirers to enable payments in the manner the merchant so prefers. And therefore, it goes just beyond QR. It becomes agnostic in terms of the usage. Now, coming to the journey that we have seen in India using the QRs, today, roughly on UPI as a platform, which itself is an open protocol, we see about close to 10 billion financial transactions. If you look at non-financial, we're talking about close to 20 billion transactions. Of this, about 58% transactions roughly are merchant payment transactions. And of this, 60% of the transactions are merchant payment transactions using QR, and that translates roughly to about 3.5 billion merchant transactions coming in QR. Incrementally, this protocol also allows for the P2P QR transactions, and we see at least on a monthly basis about a billion P2P QR transactions as well. So this data is as of July 2023. Now, one specific thing which we briefly discussed is about the habit and the behavior for the consumers to be able to scan the QR right upfront. And therefore, it is also mandatory from a platform perspective that all UPI apps should have the QR readers shown right upfront. So I've taken some examples. And because the protocol on UPI is open, there are open APIs which the big techs and the fintechs can consume. Today, WhatsApp also provides for the UPI payments. And what WhatsApp has done is that they have configured the WhatsApp camera to be able to read and parse the UPI QR values to make a payment. Now, come to imagine this from an open interoperability perspective that India has about 490 million active WhatsApp users, and their camera is ready to now scan a QR and make a payment. Coming to the platform, which is growing continuously, NPCI runs and manages this platform directly regulated by the Reserve Bank of India. 473 participants at this point of time, 100 plus app providers. Some of these are WhatsApp, Google Pay, Phone Pay. These are very, very specific entities which are driving the consumer behavior at this point of time. We have 350 plus million unique users. And the most important part is that given this open framework, which the merchants has so well adopted to working with the banks and the acquirers, we have, as of last month, in excess of 272 million static QRs that are pasted onto the counters, which a consumer can scan using any of his UPI app and make a payment. Excuse me. So to the right, you see the growth journey. 2016-17, we made a humble beginning with about $8 billion worth of settlement. And in last calendar year, we did $1.5 trillion worth of commerce on this platform, which is equivalent to about 42 to 43% of India's GDP. So in terms of the benefits, again, it has everything for all the participants. The moment it is open, I need not worry which application I am using at the front end. I am not worried on what is the source of funds that I'm drawing money from. I may be paying from my savings account, a checking account. I could be paying from my overdraft account. I could be paying from my credit card. So while the QR as an initiation point remains static, the way I pay is that I decide which of these underlying accounts do I pay from, and that does not necessarily restrict me only to one type of an account, and that brings in a lot of flexibility in terms of the consumer usage and behavior. So from a government perspective, while it is self-explanatory, there is more visibility, there is more transparency. But when you come to the banks, they get an asset-light acquiring model again, which all of the QRs do provide because it does away with the capital expenditures and the operating expenditures from bank side and the merchant side. But from a fintech perspective, it is even more relevant because hitherto the fintechs were not able to partake into the real-time payment stream. And as I progress, I will give a brief on how they have been able to partner with the banks and on a handle, which is the structure in which a merchant gets identified. They are sponsored by the banks to go and acquire merchants in the region where the bank itself may not have a reach, and therefore the width and the depth comes about on an open framework. Some challenges and solutions. We had closed loop QRs, and eventually there were two-pronged approaches. I kind of agree with what Pramod mentioned. It has to be a collaborative approach to begin with. And 2016, when we launched, we were working in a very collaborative approach. We've deepened that relationship with the banks and the fintechs. And then the regulator also stepped in and they issued regulatory directive that after March 31 of 23, there shall not be any closed loop QR or a proprietary QR. And that has actually helped that today we work on two protocols, EMVCO and the UPI protocol, which are completely open in nature. The other aspect was having two QR standards and we coexist. So how have we solved for this problem from a consumer behavior perspective is again by collaborating with the other network providers, be it Visa, MasterCard, Amex, so on and so forth. And within the EMV Co, we have embedded the merchant UPI ID capability. So now you have to look at 350 million UPI QR, the users who go and scan a QR. They need not worry whether it is a UPI QR or an EMV QR. The application reads this, and if it realizes that this is not a UPI QR, it goes and figures out where the UPI ID sits, and then it processes the transaction on the UPI rails. So consumer convenience is taken care of. From a reach perspective, not all the banks may want to go into the most remotest part of the country, given the cost linked to it. And therefore, the banks sponsor the fintechs who partner with these banks under the sponsorship model, and they go to the most remote parts of the country and create the acquiring funnel for the banks, and therefore the depth for the merchant payments. Now here, eventually, what I have noted is the fact which Pramod briefly alluded to is that the open architecture today also ensures, and which I think Nibs also mentioned, Premier mentioned, is that today the merchant could be acquired by any acquirer, and the merchant also has the liberty to work with the bank either for the funds to be pulled in the bank's nodal account, or because there is an account which is mapped under the QR, the merchant can decide to get his operative account linked into this QR. And therefore, when I scan this merchant QR with my app, the money goes directly into the operative account of the merchant and he gets real-time liquidity instead of a T+1 or a T+2 settlement. So that is how the ecosystem has kind of exploded. And it has changed not just the lives in terms of the consumers who are using it, it has essentially changed the lives of the last mile citizens who are also small grocery store owners or the coconut water seller who are now embedded directly into the real-time payment system. And the beauty is that whether it is an organized merchant like a Starbucks to your left or the unorganized merchant segment, which are smaller grocery stores or the roadside vendors, they are all very deeply embedded into this real-time payment ecosystem. And this is actually providing the fillip and the impetus for the digital payments to go through. So that is where I end, and we'll be happy to take questions. Thank you.
Thank you so much, Anubhav. Super presentation. Thank you to all of our speakers. We still have some 72 people logged on, so that's pretty impressive.